It is harder, it is longer, and it is fucking incredibly difficult to grow small amounts of capital. I'm not here to lie to you on that. If you're sitting there and you have 10, 20, 30, 40, 50 grand or 100 grand and you feel like it's not enough, wake up. The last thing on your mind should be trying to make hundreds of thousands of dollars or millions of dollars or pounds. Forget about it. Do not be blinded by numbers that are not going to be obtainable without untold levels of risk. If you aim to take shortcuts, you will eventually get cut short. So you've got less capital or smaller capital than you would like, and you don't necessarily know what to do, and you're trying to obtain as much money as possible with the least amount of money possible. Well, the first thing to say from the offset is that's not what you should be doing. Now, the second thing is, what is less capital and what is small capital? Well, that's completely dependent on the person. And before we even delve into the approaches and the psychology behind having less capital, we need to really come to a determining factor on what makes something less capital or smaller capital. Now, the reason I say this is because it is entirely dependent on the person in question. And the truth is, what you may consider small capital first and foremost may not necessarily be small capital to someone else and could actually be a significant amount of money to someone else. So you need to first of all understand, is it truly small capital you think you're dealing with? To some people, small capital is £100. To others, small capital is £1 million. There is a big contrast down to our perceptions, our livelihoods, our lifestyles, our outgoings, our utilities, bills, debts, whatever it may be, and our income play a contributing role, including our upbringing, in what we consider small capital. And the reason I know this is because I myself once had no money. In fact, several times I've been in a position where I've had no money and been in severe debt. Secondly, is because whenever we have live sessions every week with our members in the app, there's always someone, and it's fascinating, that will be like, Torre, I've taken the plays, I've made some money, I've taken some profits, but I'm scared I don't have enough money to buy the dips if we get them. Immediately I go, well, how much do you have? And they will always then come out with a number and they'll be like, I've only got 50 grand. And Bernie will kind of look at me, shake his head. And I'm just like, who are you? Who are you people? And it's opened my eyes more to people almost perceiving that they don't have enough. And that is, of course, due to programming on social media. We have been blinded to believe a lot of the time that even having 10K is not a lot of money. And the truth is, it is when you consider that most households barely have that in savings anyway. So that's one thing to first and foremost consider. Now, I'm going to assume that in the instance of most people saying they have less capital, it would be somewhere within the region of £100 or dollars to $1,000 or pounds. And that's the kind of assumption I will go off for the basis of this video. And theoretically, anything beyond that point is still a large amount of money in the grand scheme of things. So it is important to also be somewhat grounded. And it's good at the same time to be completely, anti-money. You shouldn't have a barrier on what is perceived as a lot of money. But simultaneously, if you're sitting there and you have 10, 20, 30, 40, 50 grand or 100 grand and you feel like it's not enough, wake up. Wake up, you're fine and you're doing completely fine. It doesn't matter. Now, if you fall into the category of having anywhere from $100 to $1,000 or pushing it up to the barrier of $5,000 and even below $10,000 or anywhere within that threshold of $100 to $10,000, first and foremost, the last thing on your mind should be trying to make hundreds of thousands of dollars or millions of dollars or pounds. Forget about it. Wipe the slate clean and stop being blinded by what you see online. A lot of people get blinded by meme coin flips of someone allegedly buying it very early and, hunting it and sniping it before it was fully launched. Most of the time they're insiders. Just don't believe that stuff. Secondly, a lot of the flips you see are not real anyway. In fact, most of what you see is not real. So you shouldn't use that to judge what you have and almost underplay yourself and undervalue yourself as if you do not have enough money. There is a very particular set of rules that must be followed if you are not already dealing with theoretically the high fives and the low six figures. And it's very important you understand this. Your goal is not to try and do something ridiculously stupid to try and obtain those riches quicker. You have a significantly harder journey. And the truth is, what you make should be realistically in line with expectations of what you currently have. Now, let's just say some of the coins I look for, and many of the coins I've captured over previous cycles, have been around the 1000% plus region in terms of return on investment. Now, that can, for me, let's say with the $30,000 investment I showed that went beyond 600K, that's still relative to what I invested. But if you are investing $100 or $1,000, you should not be pursuing $100,000. It's a stepping stone. It is a very slow, steady journey. And the less money you have, unfortunately, the longer you have to wait. And I would say this is also why so many people fail in trading, because a lot of people and the majority are starting with the smaller capital threshold. And most people are not patient. Most people want everything handed to them with instant gratification at the click of a finger. And unfortunately, life simply does not work that way. And if you aim to take shortcuts, you will eventually get cut short. That's the reality of life. That's the reality of trading. And it's something you must accept from the offset. And you must understand that slow and steady always wins the race. Let's say you invested into a particular coin, alt season comes through, and you turn $100 to $1,000. And many people do. In fact, I've shown members several meme coin plays where I've turned like 1,000 to 20,000 or 30,000 or 5,000 to 10,000, etc. But the goal to understand with that is that's your threshold. And in fact, relative to what you started with, going from $100 to even $500, as a matter of fact, going from $100 to $200 or pounds or euros, whatever, is a significant growth and return on investment. Now, what's significantly more beneficial for you to do as someone who has less capital is to take profits quicker and quite simply grow with every new hurdle and milestone you've achieved. So instead of trying to turn $100 and focusing on turning $100 or $1,000 to 100K, instead set the goal of, let's say, $100 to $200. Now, this can already seem prolonged because you're thinking, well, hold on a minute, I'd have to find the setup to make $200 and then take profit and then reinvest. But guess what? The minute you've got $200, the same return on investment will get you $400. And the compound effect comes into play rather rapidly. And over time, before you know it, the larger sizes you have, simultaneously, the less percentage growth you theoretically need to make a more plausible return on investment. The same also applies to having $1,000. Your goal is not to worry about 50K or 20K. Your goal is to first and foremost do what you can to try and get to 5K. Because once you get to 5K, the next flip of 100% is 10K straight away. That then becomes another hurdle and another hurdle and another hurdle. Essentially, trade within the boundaries you are within. So anywhere from $1,000 to $10,000, specifically if on the lower end, your goal is to slowly but surely reach those hurdles in almost $2,000 to $3,000 intervals, if not $1,000 intervals, of obtaining 10K first. Do not be blinded by numbers that are not going to be obtainable without untold levels of risk. It's not worth it. And this is where so many people go wrong. They try to over leverage, over trade, or over risk, and more importantly, hold their coins. Now, if you fall in the category of having less capital, there is also another very different set of rules you must abide by as a trader. This doesn't just mean being more patient with waiting for the profits to develop over time. And the truth is, there's no rush. If you aim to be here forever and make this a career, you should not be rushing the process anyway. And if you focus more on what your numbers could become over time, while simultaneously and systematically taking profits every step of the way, you are going to reach your goal significantly faster than buying coins at random prices and trying to hold them to these unrealistic prices. You would be far better off trying to capture plays that can give you at least 100%. Because in the real world, in the likes of stocks or Forex, trying to achieve that 100% ROI is significantly harder. But for someone in the cryptocurrency markets, where you've seen on even my recent plays given to the members, 100% can be done in a single week if you capture the correct plays at the correct prices. Which takes me to my next point. Not only do you have to be more patient with waiting for the growth to come over time and setting yourself goals within the current boundaries of your capital threshold, you also need to trade significantly differently and invest significantly more patiently and cautiously than most people. This means with less capital, the general rule of thumb is the lower you must aim to buy, the more selective you must be with your entries, and the more patient you must be to get that capital allocated and that exposure within the market at the lowest possible price. The reason for this is because if your money is precious, and let's say you only have $100 to invest, the likelihood is if you're dealing with $100 to $1,000, you do not have much capital liquid, and even obtaining that money could have been a very significant hurdle for you to get there. Therefore, as I always say, even if you have 10 million liquid and it means nothing to you, money is precious, it does not grow on trees, it does not grow overnight. Therefore, you must be incredibly selective with where you buy. This means not buying Bitcoin and also being realistic with expectations in that respect, that something like Bitcoin currently trading at 120K needs to go to $240,000 for you to double your money. There are far better opportunities out there in the market, which I am always showing you guys and constantly hunting for myself to enter with far better prospects. And I actually still repeat the same process now with significantly larger sums of capital because it's the easiest way to leverage and utilize what the crypto market is currently offering you. So, as an example, if you were to buy Bitcoin now with $100 and aiming for a $240,000 BTC, and that is the most money you really have at your disposal liquid, well, what if BTC was to reverse from here and go back to 60K or 100K or 80K or 30K? You don't know what the future holds. You would then be trapped in the market, just losing capital over time and very long extended periods. You have then wasted a huge window of opportunity to potentially leverage your capital. And what most people forget is that cash is also a position. Being patient and selective with your entries with less capital will ensure you are almost guaranteeing a larger return over the longer period of time. This also means, in theory, taking less trades, being a lot more selective, which you should be doing anyway, regardless of your capital size. But you must understand you're playing an entirely different game if you have less capital. And everyone around you will blind you into believing that you should be making millions and millions and millions. But the truth is, only a tiny minority are doing so. And the rest that you see are lying to you, quite frankly. So you should not judge yourself from anyone else either. And do not compare yourself with anyone else. This is really, really important. Because simply going online will cloud you to believe you must have it all instantaneously, because other people are giving you the illusion they are earning it and attaining it instantaneously, which they are simply not doing so unless they are, again, insiders, have some form of insider early allocation, and most of the time just lying anyway, let's be honest. The cryptocurrency cycles, and you should also consider yourself lucky that you are alive during a point in time where there is a market out there offering life changing returns. But this is really where the big issue stems for those with less capital. Because you're seeing everyone else making millions or even billions in some circumstances, you're trying to squeeze more out of a market, completely forgetting the core of the investment principles for any investment. A percentage is more important than anything. Most people are blinded by the prices of an asset, as an example, Bitcoin. Is it plausible, do you think, to buy Bitcoin at 120K for long term wealth with $100? Well, no, not necessarily, because the risk is significantly higher and the reward is significantly diminished. It's not a plausible investment decision to make, especially with less capital. Now, in theory, you almost want to play the game how the institutions play, and a lot of people completely forget this, by the way. Let's say now you find out BlackRock, Michael Saylor, or anyone else is actually buying, or Elon Musk was buying at the time. You must remember these individuals are trading with billions and billions of dollars, and you'll often hear the regurgitated bullshit coming from most people on social media again. The root cause of all problems, really, if you haven't figured out by now in all of my videos, is social media. But let's just say now you see that a bunch of billionaires or banks or whoever, whatever fund has invested. You must remember they are also playing an entirely different game to the rest of us. Due to the sheer amount of size and capital they've invested, they only need a fraction of a move to make more than all of us collectively. Whereas most people will see them invest and be like, to the moon, they're going to pump our bags, they're going to send it higher. They only really need 5% or 10%, which is still more than they're getting from the stock market anyway in a fraction of the time. And you, as someone with less capital, should theoretically be adopting very similar principles and aiming to get in and out of the market without holding on for significantly longer. If you have $1,000, turning it to $2,000 is remarkable. Anything beyond that is already crazy. And you must not forget a 50% to 100% ROI in the real world are phenomenal, absolutely phenomenal results. Look at most hedge funds, they're targeting 5 to 15% a year, and in some cases, maybe 25, 50% if they're like emerging markets or doing some crazy shit. But the truth is, you're getting more than that with simply just being patient and waiting to buy a candle before it actually booms at the correct prices. This is something we teach religiously because it's the key to growth overall. And this is kind of the beauty of what I do in the app as well. I get the entries in. It could be 100%, could be 50%, could be 1,000%. As long as you've got the entries, you have the freedom to really do what you want. And that's the key behind buying at the right prices. It gives you the freedom and flexibility to essentially ride a much larger move. But also, if you have the gratitude to take the profits present, take them off the table. You should not be hesitant to do so. It's a huge trap that many people fall into with less capital, aiming for the big numbers, which are not attainable. You shouldn't really be worrying about making 100K or reaching the 100K threshold for your portfolio until you're really in the 50K territory onwards. You should have the goal up there, right there ahead of you to understand what you're working towards, but that should not deter with your actual investing and investment decisions. $100 to 200 is incredible. $200 to 400 or 500 is fucking remarkable. If you can get that from $100 to $1,000 over time, my God, you are already killing it. And I see this all the time. People always say to me, bro, I haven't got enough money, or bro, I've turned this to this. I want to turn it to 100K or a million. But you should not be worrying about that at this point in time. Do not fall off track by being too greedy and being somewhat delusional in what could be obtained in a short space of time. The more money you obtain over a very steady period of time, the more confidence and patience and discipline you will also build to handle that money. Now, this could also be a topic for another video, but a lot of people do not realize that, quite frankly, the way I view things is if you are not yet in possession of larger quantities of money, you are not emotionally, mentally, really in any way, shape, or form to handle that kind of money. And the way I see life is we do not have money, or we do not have a larger quantity of money until we have earned it through some form of intelligent investment, intelligent play, hard work, whatever it may be. But you do not get what isn't deserved. That's how I view things. What you receive and what you currently have is likely a reflection of your current skill set and your current mentality. So the fact that that is all you have to your advantage to play with right now means you need to work with what you currently have right now and not to be blinded to achieve more than you realistically need to. Because if $100 is a lot to you and you can get that to $500, should you not be happy with that outcome, considering what you had before is what you considered a lot of money? And then again, going back to the originality of all of this, is it even as bad as you think? And it's often very grounding to talk to other people and tell other people what you think. When you say you have less capital, that could be life changing money to someone else. And that's the crazy part about this game. We all come from different fields, we all come from different backgrounds, we all have obtained different amounts of money. And furthermore, a lot of us have also lost a lot of money, which to some people would also be life changing money that many of us have lost like that due to the markets as well. Do not forget to be grounded and realistic, which is probably the most important note I can give you guys here. Be realistic with your expectations and always remember that what you start with and what you currently have is really the basis of what you will make moving forward. When you understand the game is based on percentages, well, yes, someone making a same amount of percentage as you with 100% ROI, well, yeah, so that person investing 100K, they're going to have 200K. But if you've got $1,000 and you turn that to $2,000, you've still made 100%. It's very important to keep the wheels in motion and understand exactly what that is in real world terms. You will never truly lose if you think that way and understand life and the markets in that way too. Now, many traders that have come to me, whether it's for advice, education, and whatever else it may be, a lot of them also have this underlying fear that they have to hold trades for the long run. This is where those unrealistic expectations spawn from, because most people have this fear that if they're to take profits, they won't be able to replicate it again. I would argue if that is a fear and that is a concern, that is also further proof of why you are not ready to obtain larger amounts of money yet. If all you can physically do is put money into the market at any given price and pray that it will one day turn to $1 million, or try to replicate the early days of BTC holders that have left coins in their wallets for eternity, you're not going to get very far because we are in an entirely different time right now. So you also need to understand that the money will come with your skill set. And in fact, the less you actually focus on the money and the more you focus on perfecting your craft, the money will flow to you as a byproduct. This is a simple byproduct of trading. The better you are and the better you have discipline to control yourself, because a good trader is not based on their strategy. A good trader is based on their discipline. Your strategy is based on your discipline. Your strategy is a meaningless metric and factor in your trading if you do not have a strategy to control yourself and keep yourself in check. So you must not be concerned about money, because simultaneously that will flow the more you improve and the more you progress, and understand the mindset that plays a significant role in trading as well. There is no point trying to master a strategy if you do not master yourself yet. It's a harsh reality to face, but it is the truth. If you have less money, then it is going to take significantly longer than most other people are willing to admit and willing to accept. Of course, it's very easy in theory to turn 100 grand to 110 grand and make that jump, but that's the compound effect in play. If you were to have £1 million Forex account, or 5, £10 million Forex account, or crypto portfolio, well, making those smaller numbers are theoretically easier, because you could put in 1 million, make 5%, and you've made a huge return on investment. But you must remember, trading is a long game. Trading is a lifetime. And in fact, trading is never truly mastered. Trading is something that is a game of survival to me. It's not about the money, it's about survival. So the less you have, the more you must be significantly oriented towards survival. And that means really taking it slow and steady, because the more you try to rush the process, the more trades you take in stupid forms to try and flip the money quickly, the quicker you're going to lose that money. And if you have less money to start with in the first place, how long is it going to take you to make that money back? So you want to treat that capital you have, if it is less than what you think it is, or less in your opinion, you need to treat that capital as your pride and joy in your baby. You must cherish it. You must be incredibly selective with where you enter, and play the game that the institutions play, which is slow and steady. Not massive movements, not aiming for unrealistic moons, waiting for the right price, being a sniper. And I actually believe having less capital, because this is the truth here. If you cannot do it with less capital, you will not be able to do it with more capital. That is also another reality of trading. A lot of traders say, if I had more money, I would be better. If I had more money, I would be able to do this. No, you wouldn't, because you would have more money if that was the case, because money is made by being better. So you also can use this as an opportunity for growth, to prove to yourself that you can trade with that amount of capital, because capital is amassed over time. That's the secret formula here. If you can play with small amounts and you can handle it in a sensible manner and slowly but surely grow it consistently, then you have officially acquired the trait to handle larger quantities of money. And before you know it, larger quantities of money will flow your way. It is a incredibly simple formula, but we just keep trying to rush the process and taking those bloody shortcuts. It's human nature. This is how we are. We are just programmed for instant gratification and urgency. We want it all now, we want it quickly, we want it fast. And most of us don't want to put the work in. But if you do not put the work in, it will simply not come your way. Consider it a test for the greater good. To be realistic, set quality expectations. You cannot expect to make the same amount of money as someone that has 100K or 1 million or 10 million. You are not in the same bracket. You are not in the same category. And there's no reason you eventually can't be, but you have to work your way up. It is harder, it is longer, and it is fucking incredibly difficult to grow small amounts of capital. I'm not here to lie to you on that. But I wouldn't say it's impossible. And in fact, it's the greatest test of all. The amount of traders that give up because the capital is not large enough and they think they need to, cut corners or do something stupid and try and flip it quickly to gain more. If you take that approach, you will lose the money just as quickly. You must understand, this is not a joke here. There are a lot of people that have invested, let's say, $1,000 or $100 into the market and may currently be up anywhere from 500 to 1,000%. Always say to yourself, what happens if this reverses? And simultaneously, what would happen if the market stops moving like this? Would I look back in 2 years and go, I could have multiplied my money 5 times to 10 times, but I didn't do so because I wanted more? A stepping stone is crucial. If you can build up slowly but surely, and many times you will be surprised, you will make more money than you anticipated. If you adopt what I've been showing you, and I generally teach you overall, to invest at the correct prices, which often means waiting for the FUD, waiting for the bigger crashes, waiting for good opportunities to come. Quality over quantity. If you do that, you're more likely than never to actually make more than you anticipated. And even if it's an extra 10 to 50% on top of what you projected, you can then take that all out the market. That would be my personal recommendation for someone with less capital. And I've actually shown this in the app several times because when I turn that XRP flip, and I've done it with various other coins, everyone said to me, Tori, why don't you do it with less capital? And I've done that several times over. There is also a greater risk you must take with smaller capital because realistically, if you are going to invest in the market, you need to almost use much more of that capital than most people. Let's say I have 100K here sitting there ready to buy a dip. Well, I could in theory just put in 20K and still potentially double that to make another 20K. And I would be very happy with the result. Something I actually done recently, 30K profit. I took it out the market plus 50K on a few other accounts collectively. I'm done with that, but I have larger amounts of capital in certain accounts. But if I was to have $100, you're more likely to need to risk a bit more of that, which also means to even make a return on the entire amount, you need to get in as low as physically possible, which can often take weeks to months. But just remind yourself of this, even if you feel like in that moment the FOMO is kicking in and you're missing out, if you actually restrain yourself and withhold yourself from buying at the point you feel the market is going to rocket on without you, it's more likely when you feel those sensations, the market is actually on the cusp of a reversal. I have found this so many times where I've seen a coin pumping and mine hasn't pumped. And this is in the beginning. And I would sell the coin I'm holding to buy the coin that's pumping. Then the coin that's pumping dumps. And then the coin I was holding pumps. And then I'm pissed off. I've learned from my mistakes. And often it's better to not do anything because cash is absolutely a position at the right time and place. And in between that phase of waiting for all of those positions or waiting for that very, very careful entry, you would have likely have taken many unnecessary trades and actually done yourself more damage than good. So to round this up, I would really say it's absolutely incredibly possible that you can turn small sums to very large sums. But how you play the game, you must be humble enough to understand that if you are dealing with less capital, you have to have less expectations of what the market can provide you. Because on average, most cycles are around 1,000 to 2,000%, depending on the coin, and most importantly, depending on the entry. So 1,000% on $100 may not seem like a lot to you. 100% on $1,000 may not seem a lot to you if you have 5K or 10K. And you can turn that 10K to 12K, 13K, 15K, or 20K in one or two trades. You have absolutely smashed it. It's about remaining grounded and sticking to reality because crypto can make us lose touch with reality. But this is just a reminder that you can absolutely do it, but it is going to take longer. I think that's very important to understand because so many people will tell you, yeah, bro, you can turn that $100 to 100K very easily, get into a couple of these plays. No, you can't. And you can in theory, but it's very high risk. You're likely going to lose it all. And those flips only last so long. You have probably seen me on social media over the years flip many accounts. Most of the time, they either get blown in the long run or I withdraw before they get blown anyway. That is the reality of flipping accounts. I have never flipped an account in terms of aggressively, rapidly, and like really trying to grow it without it ever taking a very big hit and resetting me back to the ground level. One of the last account flips I'd done, I believe, was 2023. I turned 5K to 60K. I withdrew everything from 60K and got the hell out and stopped. And that was a very lucky strike, in my opinion. I've done much further in crypto, but over a slow and steady period of what has now been 5 years. in collective slowly but surely. So think about that for a moment. It can be very easy to go, right, well, he's turned almost 30K to $1 million now, but that has been a slow and steady journey over the process of 5 years almost now. So it can look like it's overnight because we're in the present day and not many people have seen the past. But in theory, it's taken a fucking long time. But I haven't lost faith. I've still kept to the patience. I've still kept to the structure. I've kept to the formula and kept to the flow. Do not rush the process. And remember what I said earlier. If you take shortcuts, you're going to get cut short.